we thought it would only be fair, since we talked about Lumentum, we should probably also talk about Lumentum's larger peer, or by some metrics now, larger peer. The market's kind of doing weird stuff. Coherent, ticker symbol COHR. Who cares about Coherent? I think we have a few people that care about Coherent.
I did.
Yeah.
In 2024. That's when we did the very first video because, well, one reason was because the CEO of Lattice, Jim Anderson, moved to Coherent.
And he's doing a similar thing for Coherent that he did for Lattice Semiconductor when he joined a decade ago. And that is right size and rationalize the business, focus on what's most important. And of course, that means all things data center and especially optical networking, optical connectivity. So what is Coherent? Break it down for us here in high level terms.
Yeah, Coherent fits into the IDM, or integrated device manufacturer space, meaning they design and manufacture some products, but they also fit into the base materials suppliers. They have indium phosphide and silicon carbide wafers. But before we get to that, let's take a look at the most recent financial results for Coherent. I'll just point out at the very bottom, you can see why Nick said they're making the business more focused on data center and communications, because that is where most of the revenue is, 75% and 25% to industrial. And just to the right of that, you can see 41% year over year increase in data center and communications.
Pretty good stuff. The revenue growth, 27%, that is pro forma. The reported revenue was 21%. The reason it's lower is because they divested a couple of businesses over the last year. And so this 27% is reported as if they hadn't divested any revenue. So nice acceleration in growth, and more growth is coming. But this is very much now a data center business that's getting more acute here.
And the gross margin, almost 40% now, which is a milestone for this type of company.
Yeah, same as Lumentum. Called that out in Lumentum. 40% is like a magic number for the IDM business.
And then this chart illustrates it even more clearly, how they've kind of been not phasing out industrial, but it's been certainly a smaller portion of the revenue in comparison to data center and comms. Let's talk about some of those divestitures, because that is an important reason why, in our opinion, why they brought in Jim Anderson, is making sure that this business becomes a focused business, because Coherent was not exactly a focused business.
And still, by some measures, maybe you could argue is not. There's still more work to be done. That's important when you're trying to maximize your value to shareholders in what has very obviously become a secular growth trend for Coherent. That's what you need to do. Remember, Coherent has been built via multiple mergers and acquisitions over the last decade. The big one was Coherent and II-VI merging together. There's all this other ancillary stuff that they do. Remember, Lumentum doesn't really have much in the way of this anymore, but this segment, this aerospace and defense business that was divested to a private equity company for $400 million, that would compete more with LITE or IPG Photonics, which is the next divestiture, I guess, really. This materials processing tools business to a company in Germany, Bystronic, a leader in sheet metal processing. Obviously, that's not core to Coherent's business. That would be maybe something more along the lines of what you'd expect to see in IPG Photonics business, IPGP, which is our small little bet on manufacturing lasers, cutting and welding. So they got rid of that. They ended up selling this thing for $51 million. Sales were $100 million last year, which means it was probably not profitable.
It's just dragging down the margins.
It's dragging things down. So they sold it to someone who could do more with it. It was better strategic fit, and they get a little bit of cash.
Both of those would fall into this precision manufacturing segment, the fabricating and metalworking.
Yeah, in aerospace and defense, and then more of an end market products business, not really focused on what Coherent is trying to be all about. And
tightening the ship.
Yep, exactly.
This is one thing they are focusing on, though, is the silicon carbide business.
And this fits into the materials part of the business that you highlighted on the first slide under base materials. Remember, we can take this all the way back to when silicon carbide was a hot investment theme. The first time it was a hot investment theme in 2021, 22, and 23. 23 had rolled around and we were, in a bear market. The auto, industrial, and power markets had topped out, and we were just beginning the start of a 2-year downtrend. And Coherent went and got investment from two customers that needed silicon carbide wafers, also epi wafers. And so they landed 500 million each from Japan's Denso and Mitsubishi Electric. Coherent kept the other 75% equity in the business and got some cash to develop its raw silicon carbide wafers and undeveloped epi wafers business. So this is where they fall, a big part of what they do, where it falls into the material supply. And a couple of things announced in the last 6 months regarding this business. It sounds like something is happening in the power market. What could that be?
This is on their 300 millimeter wafers for AI data and AI data centers. And then again, on the bottom there, that's the epitaxy platforms that Nick was talking about for data centers and industrial power applications. Something big.
Yeah, data center power and power grid infrastructure. So it sounds like Coherent is an automatic buy. We talked about all the good stuff, but this is a manufacturing business, which means they need to build out the manufacturing capacity needed to support all of this growth that they're expecting. They say it themselves, especially in the first box there on the left, scaling capacity. That means you have to spend money. If you want to make money, if you want to accelerate performance and enhance efficiency, profitability, first you have to scale. And that means spending money first. That's been a bit of a problem because some of these markets that they're trying to scale into historically are just not very big. And if you're not a fully integrated company, like Coherent has kind of had to fill the gaps, that's the reason for all the mergers and acquisitions over the years. Now suddenly you have to invest more money in those gaps that you just filled to scale them up to meet demand. Where's the cash going to come from?
Well, they did get some cash from NVIDIA. They got $2 billion investment from NVIDIA. And this is a good time to look at their balance sheet because they needed it. They needed the cash. If they're going to spend money on the research and development and scaling up their manufacturing abilities, they needed cash. Total cash is in green. You can see it was pretty stagnant there for quite some time. Now they have $2.4 billion on the balance sheet, and they've paid down a little bit of debt over the years, which is good.
And that's one of the things Jim Anderson said he wanted to fix when he came in a couple of years ago.
But they need money for these things like this right here, new growth engines. So looking at the optical circuit switches right now, but co-packaged optics and near packaged optics in the second half of 2026, and then onward and upward. So if they're going to do that, they need to scale out the manufacturing.
And here's where you really see the problem and why they needed to get involved with the circular economy. The revenue actually has returned to growth after the crazy post-lockdown period there in late 2022. Yes, profitability has scaled up a bit, but even after all those M&A, mergers and acquisition and better scale, it's not like Coherent is wildly profitable. In fact, in the latest quarter, free cash flow was negative. It actually accelerated. It was much more negative than the previous two quarters by quite a lot, almost negative 400 million, because they had to invest in manufacturing. And so NVIDIA wants these products to help them build out all of their data center infrastructure for their customers. Coherent needs money, NVIDIA has money. And so they said, hey, we'll take some equity in your business. Here's some cash. Go scale up your manufacturing for us.
And this is different than some other companies that have sold warrants.
Right, especially the warrants, including AMD, ST Micro, Cerebras, the new IPO. It's essentially like a discount that you're giving that customer, an incentive to purchase your products. Here's the discount in the form of future stock that will vest if you spend money with us and give us revenue. This is a little bit different. Cash in exchange for equity is kind of like, we know we need you to scale up, but we know that you need the cash to do so. I know it's weird. I get it. But circular economy stuff, it's kind of a necessity at this point, and it's a cheaper financing route than if you went to the bank or if you diluted shareholders. A lot of shareholders might be unhappy if a company like the size of Coherent decided to fire up an at-the-market ATM program or something like that. Anyways, here's the guidance.
So expect revenue to be between 1.9 and just over 2 billion. Gross margin maybe a skosh elevated as well, going up to 41%. Earnings per share increasing as well. What do you think about guidance?
Well, let's look at the revenue slide again. It's a pretty big sequential increase in sales from the previous quarter. Let's just call it $2 billion. Big year-over-year increase. So the company is re-accelerating its revenue growth, probably more like 30% or more revenue growth. We'll see how the profit margins shake out. I think we're probably going to have some more negative free cash flow because they're just building out that capacity. But at this point, the market is very much interested in the growth and the scale up of the business, and we'll worry about profit margins later on. We've said in the past, Lumentum was kind of the momentum play. Coherent is kind of like the more value play of the two because they need to continue to focus the business. There may be some more asset sales at some point to help do that. And that can be pretty good. That can unlock some value along the way too. So we'll see how it shakes out. You kind of have two options here besides NVIDIA and Broadcom. Definitely Broadcom involved in this market as well. They have a little bit of indium phosphide manufacturing in-house for their own products too. Check out the Lumentum video if you want a comparison, but it looks like the moment for these optical companies has finally arrived after being kind of like smaller niche parts of the semiconductor industry for many years. It looks like optical networking is maybe a thing, and maybe it's here to stay for a long time.
It's definitely a thing.
But we'll see how it pans out. We are happy to keep holding both.